Good morning. This is Phillip Streible, Senior Commodities Broker at R.J.O. Futures, giving you your weekly metals commentary here for Wednesday, February 27th. Looking at the metals, they're kind of in a mixed picture at the moment here. We saw a real good reaction on gold and silver yesterday, kind of a flatline reaction on platinum, palladium, copper, a little bit weaker action. Basically, what's going on right now is the primary focus is Bernanke, his testimony here. It's the second day here today. And yesterday what he did was he came out and he reaffirmed quantitative easing, that it's going to continue to go on, that he still feel that the labor market is quite depressed. They do see some recovery in like the housing market and other sectors of the economic globe, but nothing too critical as far as the labor department is concerned. We won't see that until we have the next jobs picture, whether it starts to improve. But I don't think that it matters. I think Bernanke is fully going to stick to this $85 billion per month QE plan until further notice, until those objectives are achieved. So with that being said, we saw a $28 move up on gold. We saw about a 60-cent move up on silver. And then I said, like I said a second ago, platinum, palladium, copper all kind of flatline because of the fact that we've seen some weakness in the S&P 500. Now, if you look at gold, right now we're trading right around 1600, 1606. Close-in support is going to be 1600. Upside resistance is really where we started off at, closer to the beginning of the year. We had a consolidation program from about the 1650 on up to about 1680. A halfway strike on that would be like 1665. That's probably going to be your next major resistance point. I think that's where ultimately we're trying to work its way up to. But unless we get some more reaffirming out of Bernanke, we get some weaker data out of the U.S., we also get some more confusion over in Europe, especially with Italy and their election, then I think that those are the three things that need to happen in order to get us to that level. Otherwise, I would still continue to watch options, look at protective options for any long positions, or look at upside, outright buying options for calculated risk type trades. Looking at the silver market, it's still below the $30 range. We're like $29.20 right now. It's been kind of wild. It gets up to like $29.40, backs off to $29, and we've been kind of consolidating in that type of fashion. I still think 30 is going to be your upside resistance point. The $29.65, whatever the little swing low was, that's going to be your key level of support. Silver options, they're kind of expensive. If you go up to like 31.5, they're still several $100s. I think it's because of the fact silver's a little bit more volatile. Then if you look at platinum and palladium, platinum has a key level of support right around 1600. It kind of comes down to that level, and then it gets a little bit of a bounce. This has been one of the first times we've seen in a while where platinum and gold are back at the same price. So it's interesting to see what story is going to pan out and how that spread's going to continue and start from here. But if you have any questions, give me a call, 800-438-4805. Remember that futures and option trade involves risk of loss, may not be suitable to all investors. Good luck, good trading.